is up. All right, a little bit of a change of pace. All right, as always, I just felt like I had to put this in there. This is a disclaimer. This is not financial advice or investing advice. I'm not a personal finance guru. I am an individual that has worked very hard to make money and has learned a lot through that experience of making money. And I want to share that wealth of knowledge with you guys, or at least I want to share that experience with you guys. So the different principles that we're going to talk about, the formula on how to pay yourself, the how to make more money. Once again, this is all through my years of experience of doing so. I started entrepreneurship at 19. I'm 28. So I guess I've been at this pursuit for 9 years now, which is crazy to say. If you guys want actual, like, real advice from professionals, always make sure that you consult either an accountant or a lawyer or a financial advisor before taking action. Or you can take some of these principles to other trusted sources that you have to see if this even applies for you. All right. But once again, where all this information is coming from is personal experience. All right, so before we get into the nitty gritty, before we get into the formulas and the trackers and how to make more money, we got to get this right. We got to get the money mindset right. We got to get what's going on between the ears in a good spot when it comes to money. And if I'm being honest, this is the biggest reason why people don't make money, is they have very bad perceptions of money, very bad philosophies around money, very bad principles around money. That probably is a generational thing. All right. My parents, both my parents, I love my parents. I'm very grateful for my upbringing, but I was not brought up in an environment that money was talked about in a good way. Both of my parents worked. Both of my parents still do work to this day, full-time jobs. My mom is a full-time teacher. My dad, he owned a landscaping business. Now he works for a landscaping company, but both my parents work a lot. My dad works 6-7 days a week. My mom works 5 days a week. They always cut coupons. They always would say money doesn't grow on trees, the whole 9 yards. All right. So I did not grow up in an environment that loved money. I had to basically unfuck myself when it came to money mindset. And I had to rethink and relearn different ways and principles of thinking about money. So we'll talk about that. We'll dive a little bit deeper. All right. So let's get into it. So the very first principle that I think you should adopt about money is fuck status. All right. And what I mean by that is we need to rewire in our brain what money and status means. All right. Status with finances specifically is not your car, is not your clothes, is not your house, is not your jewelry. All right. For myself, I don't even own a car. I sold my car. I had a nice car and I said, why the fuck do I need this? I don't fucking need this. This doesn't do anything for me. And I sold it. Clothes. I mean, Caitlin has to beg me to go buy new clothes. I have some nice clothes, but Caitlin has to beg me to go buy new clothes. It's not top priority for me. House, I don't own a house. I rent, and I'm very happily a renter. Probably one day we'll own a house though. Jewelry, I got some jewelry. I got a wedding band, right? But it's not my main priority, or at least I don't attach my financial status to these accessories, right? To my car that I don't have, or to clothes, or to house, right? I don't attach my status to these things. All right. Instead, your financial status, or what you need to think about with your financial status, is what your bank account balance is what your investments are, and what your skills are that you have in order to make money. All right. Skills is something that nobody can ever take away from you. No government can take your skills away. Nobody can ever take your skills away. So you need to attach your financial status to your bank account balance, to your investments, and to your skills, not to your things. All right. Now, this doesn't mean that you can't have nice things. All right. It's just you can't determine your financial status by these nice things. And instead, you need to link your financial status to these things, the things in item B here. All right. Principle number 2. All right, so we're talking about buying nice things. All right, this should be these two could be very good principles for you when you're going to buy something that maybe isn't going to get you a return on your investment. It's just something that you want to have. It's a nice to have thing, right? 2 principles that you can adopt is, number 1, if you can't buy it twice, then don't get it. All right. This is something that I learned from Grant Cardone, but when it comes to bigger purchases like homes, cars, things of that nature, if you can't buy it twice, then don't get it, right? Then don't get it. Or the second principle is live on the money left over after taxes, saving, and investing. And we'll talk about that in the formula that I'm going to teach you. All right. So when it comes to buying nice things, if you can't buy it twice, don't get it. All right. Principle number 3. There are 3 rules to money. All right. There are 3 rules. That's it. Just 3 rules. We're talking about 10 different principles. But honestly, if you could just learn this one principle, you're going to be in a good spot. All right. So the 3 rules of money. All right. The first rule of money is you need to learn how to make it. All right. And you can increase your earning potential by increasing your skills, right? When we first start off, right? Maybe we do an entry-level job, right? We invest in our skills. We get great leaders. We get good coaches. We improve our skills. Boom, we improve our earning potential. All right. So number 1, you need to learn how to make it, and you need to learn how to increase your ability to make more by harnessing more skills. All right. That's rule 1 of money. All right, rule two of money is you need to learn how to save it. All right, this comes from discipline and impulse control. All right, the reason that I'm so or I talk so much about keeping control of your body, right? Keeping control of your routines and your habits this is a big part of it, right? If you don't have discipline, and discipline is transferred from all areas of life, right? Fitness is the one that I'm using as an example now. But if you don't have discipline in this one area of your life, you're not going to have discipline in your finances either. All right. So number 2, you got to learn how to save it. That's through discipline and impulse control. All right, number 3, all right, the 3rd rule of money. Got to learn how to earn it, got to learn how to keep it or save it. And then number 3, you got to learn how to invest it, or you got to learn how to teach your money how to make babies. All right, you want your money making babies, and you want this happening while you're sleeping. All right, that's done through investing, and we'll talk about that today as well. All right, the 4th rule with money is you can't save your way to wealth. All right, this is probably the one that we all need to unfuck ourselves on. All right, is you can't save your way to wealth. Watch this. All right, a typical savings account earns less than 1% interest a year. All right, inflation in the year 2022, our US inflation rate was 8%. All right, so let's look at this really quick. All right, so let's say that you had $100,000 in the savings account with an interest of less than 1%. Which is pretty standard for most savings accounts. All right. That means that your money depreciated $8,000 in 2022 because of inflation, right? So if it's less than 1% and inflation is 8%, that means that your $100,000 in this traditional savings account depreciated 8%, or in this case, $8,000. All right, which means that your $100,000 that was sitting in that bank account and you felt really good because you had it in that bank account was really worth $92,000 in purchasing power because it didn't grow. It just sat in that bank account and it devalued, right? It depreciated. And in this case, by $8,000. All right. So this should be very eye-opening for you, because so many people say, yeah, just save your money, just save your money, just save your money. Yeah, that's fine if you save your money. But it's not that money isn't making anything, right? If anything, it's actually devaluing because of inflation. And inflation happens on average about 3 to 4% annually. All right. Obviously, last year, it was more than normal. It was that 8%. All right. So what do we do? What do we do about that? All right. There's 2 things that we can do about that. Number 1, we can learn how to invest, which we'll talk about today. And number 2, we can improve our skills to increase our earning potential. All right, we'll discuss both of those things today. All right, the 5th rule of money is all around us. All right, it flows to those who pay attention to it. All right, this was one of the biggest things that I was taught when I was trying to rewire my brain about money. I think Grant Cardone talked about it. So money is all around us. Like, literally look at everything that's around you. All right, this desk that I'm on, this city that I'm in, the buildings that I can see, this computer, right, this couch, all this shit that's around me has a price tag on it. All right. And we think so limited on money. We think that there is a scarce resource of money out there. There is not a scarce resource of money out there. All right. You are in the ocean of money. Like I said, if you look at everything around you and you just viewed everything as having a price tag, you would realize how much money is actually out there. It's a fuck ton. All the cars driving on the road itself, even the land that's undeveloped, that has a price tag too. Everything has a price tag. And hopefully, once again, This is getting you to see that there is not a limited supply of money out there. Money is all out there. And heck, money is being printed every single day. There is an endless supply of money out there. And you got to adopt that abundance mindset. Because if you have that scarce mindset, what you're going to do is you're just going to hoard your money. You're just going to hold on to your money. And you're probably going to save it in a bank account that isn't making anything, right? That money's not making anything. If anything, it's being devalued, right? And that's the type of thinking that keeps people stuck in the same financial positions, right? The wealthiest people in the world realize this, and they don't hoard their money, right? And instead they invest their money into things where their money can then go on to make more money. All right. So the last thing I'll say on this one is, the only reason you don't have more money is you don't have a good relationship with it. So it starts with what's happening between the ears. Number two, you haven't developed or increased your skill to increase your earning potential. Number three, you haven't learned how to save money. And number four, you haven't learned how to invest money. All right, so that's principle number one. That's principle number five. Money is all around us, and it flows to the people that pay attention to it. All right, number six, money is not the root of all evil. The lack of money is the root of all evil. All right, this one I learned from a mentor. I think his name was Darius. He was one of my mentors when I was coming up in the online fitness coaching space. He said, money is not the root of all evil. The lack of money is the root of all evil. All right, money makes you more of who you are. All right, if you're an asshole and you have money, you could be more of an asshole. If you're a greedy person and you have more money, you could be more greedy. But the opposite is also true. If you are a very generous person and you have more money, you could be more generous, right? Money just makes you more of who you are. So if you believe yourself to be a good person, then you should be trying to make more money. Right. One of the many reasons that I want to make more money is I want to do more good, right? I want to be able to reinvest that back into this business for you guys. I want to be able to reinvest that back into this business for the clients. I want to be able to help my parents out. I want to be able to retire my parents, right? I want to be able to do these things because I view money as a resource to allow me to be more of myself, right? So once again, if you believe yourself to be a good person, then you should seek more money. All right. Like I said, though, coming back to this quote, money is not the root of all evil. The lack of money is the root of all evil. Think about it. Most crime, theft, or greed comes from either the lack of money or the perception of the lack of money. All right. So it's actually a lack or a perception of lack of money that creates greed. That we have theft, that we have crime, that we have evil in the world. All right. So if you're a good person and you make more money, you're going to do more good things. All right, principle number 7, not all debt is bad debt. All right, credit is free money to make you more money. And this is how very wealthy people think. Very wealthy people leverage credit. They leverage debt to make more money. I'll give you an example. We were about to invest into the AI software. Obviously, we chose to go a different direction. We're going to, take that time, resource, and spend it on growing ACA or starting ACA. But the way that we were going to invest in the AI software is we were going to leverage debt. We were going to take a loan out. We were going to use money that we didn't have to fund this software. But the reason that we were going to leverage debt is because we realized that once this software was created, it would make us more money, right? That's how wealthy people think. How can I get a credit card? How can I get a loan to invest it in something that in return is going to make me more than what I have to pay back for that loan? And then in the long haul, continue to make more. All right. So my question to you is, how can you leverage credit to go out and get more skills to increase your earning potential to then be able to make more money? All right. Number 8, get around those who love money and have a good relationship with money. This was something that was pivotal for me and hard for me because as I was building my online fitness coaching business, I lived in my parents' basement, but I leveraged podcasts and I leveraged books. I've mentioned Grant Cardone a couple of times now. I believe he is someone who has a great view on money. I believe he is someone who has a great money mindset. So when I was coming up, I listened to a lot of his books and a lot of his podcasts to be able to learn those things. All right. Also, I got new friends, and I got friends that liked to make money and had good views on making money. And once again, that poured back into me. All right. Number 1, Or sorry, number 9, go all in on one. All right. You'll hear it all the time. I hate this quote, but you'll hear it all the time. Millionaires have 7 income streams. Yes, maybe it's true, but I think it's improperly discussed. The way that it's perceived is that you need to have 7 income streams in order to become a millionaire. That's not true. Most millionaires and multimillionaires and billionaires went all in on one thing, and then they took that money that they made from that one thing and then diversified into multiple different things. All right, that is the proper way of discussing that quote. But I'll give you examples. The wealthiest people in the world went all in on one vehicle. They said, this will be my vehicle for wealth. All right, Grant Cardone, he went all in on real estate. Warren Buffett, he went all in on stocks. Alex Hormozi, he went all in on his business knowledge and created a portfolio of companies. Jeff Bezos went all in on Amazon. Bill Gates, Microsoft, Steve Jobs, Apple, so on and so forth. The wealthiest people in the world went all in on one vehicle. All right. Like I said, most wealthy people, they take a huge position on one thing and go all in. All right. Principle number 10. Find ways to taste the next level. All right, what I mean by that is if you want to increase your wealth, you've got to get around people that are at the place that you want to be. So I learned this one from Ed Mylett, and I love this one. Every single month, he says you want to set a financial target for yourself. All right. And if you hit that financial target, you treat yourself to something that only you would be able to afford if you hit that next level. Let's say it's a specific restaurant. All right. You know that there's the wealthiest people in your town go to this one restaurant. You hit your financial target for that month and you treat yourself to dining at that restaurant. Now, that experience of dining at that restaurant gets you around that energy, gets you around that environment, and gives you a taste of what it's like to live that lifestyle, which then pours back into you because it's extra motivating and makes you want to do it again. That is my finance training. I hope you guys enjoy. So if you have any additional questions, let me know. But yeah, I'll see you in the next one. Peace.